All right, family. Back with another video on the currency breakdown. In this video, we talking about the yen, breaking down the yen, which is dealing with Japan. So looking at the weekly, it seemed like it's giving out steam here, right? These candles is kind of getting weak here, so that's something to notate. But we also is at a weekly level, a monthly support. um, so yeah, coming down to the daily. Put this over here, excuse me. So this was the swing point, swing high, swing low, came up. You see now they broke structure right here, right? And then came all the way here, made a higher high, came back down. Thrush made a higher low, excuse me. Came on up, so okay. So right now, this broke structure. So right now it's in high demand. Okay, cool. But right now I notice it's at a high. Look at this. Look what happened when price reacted here. Might see a little pullback here. I feel like it's going to pull right back to this level, possibly. Possibly, right? The demand for the yen is strong. I feel like that is dealing with the characteristics of the currency, right? This currency deals with when the market is in turmoil or the world is in turmoil, they'll flee to a low interest currency to do other things, right? And it's a safe haven. So even breaking that down on the 4 hour, let's see. I feel like now if it break here, it should pull back up into here. I'm gonna be honest. I'm gonna be looking for it to pull back here, but we'll see how everything play out. Let me see. Straight to business. Let me close all this down. Going to the Japan economy. All right. So what we got? Pretty weak, right? Now this is possibly because the demand is weak with the global demand dampening and supply is weak domestically. They say things are improving domestically in Japan, but we'll see. But pretty much going to repeat the same things. You just got to know the characteristics of these currencies. Now the article said firms face, and I look at a couple of articles or a couple of websites, which I'm going to share some of my videos. That way you'll know where to look at and engage with your trading. But firms faced a steeper drop in new orders, right? Why? Because the global demand is weakening, is dampening. Okay, weak demand conditions force manufacturers to scale back production, reflect the ongoing headwinds for the sector. So manufacturing, meaning that they're going to have some challenges in the future, pretty much, right? Drop on down to the services and composite. Pretty strong. Okay, not too bad. So it's still, the demand is still there for sure, right? PPI, producer price index, is dealing with the inflation for businesses, for their products, right? It's so-so. It's so-so right now, right? Reflecting sustained inflationary pressures with Japan's production sector. I think that is welcomed, so that way they can be able to pass it on to consumers. Remember, Japan and China is a little bit different. They want the inflationary pressure, so that's a good thing. These are projections. These projections don't look too good. Well, at least for the manufacturing. But again, we'll see another projection. Let me see. Okay, that's mixed. We'll see. Consumer sector. All right, consumer confidence not too shabby. They feel pessimistic about the state of Japan economy. Consumers feeling uncertain about the economy and future dealing with Trump tariffs in Japan, possibly, right? Retail sales. See 3.9. Okay. So it's so. It's not too shabby. Yeah, that's not too shabby. So let me see. Consumer spending still looks pretty good in Japan, I would say. Would love to see the follow up of household spending data to get the bigger picture of consumers in Japan, which is this reading. So I can't wait until this come out to kind of solidify this. Some things give forward projections, so you want to take a look at that. Let's see. From an article, it said, but still pointing to resilient domestic demand. So things still look so. And with the consumers. Let's see all this. So the labor sector right now, we gotta wait. All this is old. Trading partner sector, tariffs will see how the tariffs impact this data. Oh, it already came out, which it dang sure did. Exports 7.2. Okay, imports. Good God Almighty. Let's see. Article said balance of trade. Japan trade deficit widens as imports surge. Exports to China drop. See, this is not good for the Japan economy neither, y'all. Right? Export year over year. Let's see, this rebound was primarily driven by year over year increase in shipments to China. Now, this is interesting. Buoyed. I don't know if I'm saying that right, but by strong demand for chip making equipment. So we got to take a look at that too, right? Because that's pretty big in the U.S. And with China, however, exports to the U.S., Japan's largest trading partner, failed. Let's keep this in mind because we understand what Donald Trump say he's trying to do. He wants, he has a certain projection for America, and he wants us to use more of America products instead of us going out and outsourcing or going to other countries. You know, he want to bring the money back home. So keep that in mind for you trading. Now, imports, in contrast, imports surged quarter over quarter, which negatively affected GDP by subtracting it. So keep that in mind. It's going to affect the GDP. So imports affect GDP. I'm going to have to remind myself of that. Imports affect GDP. Central banks, let's take a look. That kind of messed me up a little bit. So most of this is old. Let me see. This came out in January. One of the members noted that with economic activity, then prices remain stable. Risk to prices have become more skewed to the upside, emphasizing that rate hikes should be timely and gradual. Some policymakers warn that continued yen depreciation and excessive risk taking could lead to an overheating of financial activities. To counter this, one board member argued for additional rate hikes to stabilize the currency and prevent further distortions in the market expectations regarding BOJ policy. BOJ means Bank of Japan. That's their central bank. All right, so we see that they are raising it. Interest rates, which that's what they want in their economy. Bank lending, still trying to figure that out, but it's at 3%. Inflation. Now let's see how inflation doing. We want inflation to increase here. But I remember also reading that they don't want it to overshoot because of the nature of everything. So I feel like the challenge for everybody with the central banks is how to balance everything that's going on, man. For real. But inflation rate is at 4%, so that's pretty good, right? That means the BOJ going to be, I'm pretty sure they pricing in interest rate hikes. Core inflation, which is dealing with without food and energy because it's so volatile. You see core, they take that out. And so 3.2, so it's still going as planned, right? Stronger than what they expected over the previous. This is interesting. So not too shabby. Rising import costs driven by weak yen have led more businesses to raise prices. Okay, and raising prices is also going to be dealing with increasing the inflation, which they're looking for, prompting concerns that inflation could overshoot expectations. Keep this in mind so we can see how the Bank of Japan actually talk about this in nature. Now, Tokyo didn't do too good. Marks the first decline in 4 months, largely due to reintroduction of energy subsidies. So I'm going to be taking a look at oil and energy again. Let's see how that goes. Or XNG. And housing starts, man, they doing bad there. Construction orders did come, so something to take a look at. let's look at some notes now. I need to. Oh, sorry, y'all. So some policymakers warn that continued yen depreciation and excessive risk taking could lead to an overheating. So that already, I can delete that because that's under the interest rates. Rising import costs driven by a weaker. So that also I can delete. The weakness in domestic demand, which was also reflected in decline in imports, is weighing on the economic growth. I don't think I've seen that. Let me see. Imports. Sorry, y'all. I must be tripping over here. I think I can delete that as well. Because they said also that domestic was improving, so this might have been old. Oh, this is old. Excuse me on that. Yeah, we're going to go straight to China. Let's see. Got some heavy hitters coming out. All right, so manufacturing sector. Let's take a look. When you see Cakeson, if I'm saying this wrong, I do apologize, honestly. This is, anytime you see this, is dealing with the small businesses. Anytime that you see this one is dealing with the big businesses in China. So right now, okay, oof, pretty weak. Let's make this big. Put this over here. So pretty weak. You see the numbers. I mean, global demand, right? Supply is weak domestically in China. New export orders remain weak, reflecting sluggish global demand. We know external risk also remain a key concern, with rising geopolitical uncertainty adding pressure to China's export environment. Disruptions in global trade policies could further dampen overseas demand, making it difficult for manufacturers to sustain current production levels. And it's a lot going on. Domestically, consumer spending remains sluggish, highlighting the need for policy measures aimed to boosting disposable income and restoring confidence. Right, coming down to the services and composites, so that's not good at all. Let's see. While supply and demand conditions showed improvement, services growth lagged behind, pointing to a weaker consumer activity. So not only are China getting hit hard with the global demand, but they also domestically in their own country, the consumers are not doing too good. The activity is very low, which they want more spending in that economy. Employment in both sectors fell significantly, and overall price remained subdued, particularly factory gate prices in manufacturing. These numbers are not good. I mean, it's upholding a little bit, right? Because you see here, it beat this number. So it's so-so, but it's mixed, right? PPI, man, overall price levels remain subdued. Vehicle sales, and China is big on that. So chip making equipment and semiconductors from Japan seen an increase for January reading, but this is because consumer spending is weak in China. So though even Japan is exporting a lot over there to it, because the consumers are going through it in that country, they're not even spending. So let's keep this in mind. Let's see. So 50. Okay. Services. Okay. So they got a little turnaround here, but overall still weak. Right? Still weak. Consumers, this is old, waiting for that to happen. Labor market, this is old, waiting for that to happen. Trade partners, old, waiting for that to happen. Central bank, inflation. Let's see. Okay, that's good. Okay, not as strong as they want to. Overall, this looks pretty good. Far below government's annual target. These figures underscore subdued consumer activity and insufficient demand to drive price increase. Though even that's pretty good, it's still low. The government is looking for 3%. They can't even get it there because of what consumers are feeling there. It's low. So the young loans. Let's see. I'm still trying to understand how this plays, but my psychology or what I think about it is that if they can supply loans, they're trying to push the consumers to spend in that economy. This is their interest rates, 3.1, 3.6. Their housing is terrible, man. They've been going through it ever since last year. Now, real estate investment continue to struggle. Mm. Let me see. Marking the sharpest annualized contraction. The steeper drop reflects ongoing pressures in China real estate. So we've been doing that for a while. I don't have. I had an index for the yawn, the yawn. I think that's what it's called. Please forgive me, y'all. I'm so sorry, but it's so the yawn index is so I can't even read it. So I don't have a index for China. It was just horrible. So I use Japan's. Um, I'm pretty sure what they would like to see is an increase, which would boost consumer activity, of course, because they want spending. Vehicle sales increasing will boost consumer activity. Manufacturing PMI increasing, which helps productivity, supply, and disposable income and restoring confidence back to the consumers in that economy. Services PMI increasing, which deals with the demand. And then UE actually declining, which helps disposable income and restoring confidence back to consumers in the economy. That's the upside risk that will increase the yuan. Now, what's the downside thing in China? Well, uh, manufacturing declining, which will impact productivity growth, supply and disposable incomes deteriorate confidence in the economy. Services declining, which deals with the demand. China needs a boost in consumer activity. Retail sales declining, which will deteriorate consumer activity. Balance of trade and exports declining, which could still mean domestic struggles and challenges, as well as global demand steady declining. This is not good for China whatsoever. It's like a double whammy going on. Imports increasing, which would negatively impact GDP. Right? I don't think I open up Japan's. Let's take a look. Get in the minds of the members, right? I don't know if I'm gonna read the whole thing. Gradual policy tightening path, so they're looking at that on the realization of economic and price outlook. They're looking at the timing of the adjustments and it's going to depend on evolving economic activity and prices and financial conditions. Key considerations: underlying inflation trends and financial conditions, with a focus on balancing risk and they got a man. So that balancing act is crazy. Let's see. So rate hikes gradually in flexible manner. So we can see that here. To ensure domestic demand continues to recover. Optimistic outlook for Japan economy. So keep that in mind. Increasing wages. Also want to increase wages. Strong consumer spending. And so it looked like their focus in Japan and China is the consumer activity to keep it high. Like, that's what I'm understanding. Explain inflationary pressures are mounting. Wage increases. Let me see. Bank needs to raise timely and gradually, so we know that for sure. Gear shift gradually, so everything is they on. It seems like all of their members are on the same page, which is good. This is really good. 3 key risks that could drive prices above BOJ baseline scenario. A stronger wage price cycle, inflationary pressures from domestic factors, and the market volatility, especially in the exchange rate stemming from a recovery in the U.S. economy. Now that's going to be interesting. Okay. Excuse me. So, recent rise in JGB yields. I'm still trying to learn about bonds, so I don't want to kind of talk too much on it. But if you know something, let me know. Let's politic about it. I need more study on the bond market. Reflects the view on the economic and price outlook as well as overseas development. Yeah. So this is, yes, the Japan economy. So we're gonna be looking at Japan and China thing. So just wanted to give a breakdown on these two economies. It seemed like the main focus is, of course, the global economic outlook, but the consumer. They want demand, consumer activity to be spending, 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 spending. They looking for inflation to go up. So another breakdown. Catch you in the next video. One love. Peace.